The rand weakened in early trade but has since made gains ahead of the Brics summit and monthly inflation figures set to be released by Stats SA. Trader and founder of Herenya Capital Advisors, Petri Redelinghuys, joins us now to take a look at the latest market moves. So, Petri, you heard from the police minister ahead of the Brics summit today that no one should be scared. It would appear that the rand is also not scared. What's influencing trade there?
Good afternoon, and thank you for having me. I think there's a couple of things really happening. I think the Brics summit is one that may or may not have some influence on the currency. I think it's more important to first see what is discussed at this Brics conference, as well as whether or not they lay sort of a foundation or a path for a potential Brics currency. There's been a lot of talk about it. The last official communications we saw is that it's many years away from now before they'll be able to implement something to that effect. So I think that the rand is kind of more likely to respond to some sort of an outcome from that Bric currency rather than the build up to it. What we have seen at the moment is that the dollar index has really rallied back up to the 103.6 level, which we've seen has been resistance in the past. And from here, we might see it come down a bit again. So in other words, over the last 2 months, the dollar index, or the US dollar, has been very strong, and it has reached a level where over the last year or so, it's kind of topped out in its strength. And from here, we might see it come down again a bit or weaken a bit again, which will in turn strengthen the rand. That is kind of the base expectation for now, outside of any other major catalyst that might drive the market in a different direction. What we've seen in the equity market, at least, is that equities have been relatively weak over the last couple of weeks, and this has sent money essentially into the US government bonds, which is part of the reason why we've seen dollar strength. So people are, even though they're sort of selling off their US equities, particularly tech stocks, they have been buying US treasuries because they're getting really good interest rates, right? So this, I think, will probably continue to be the trend for a while. I think in the very short term, though, over the next couple of days or the next week or so, we might see the markets bounce a little bit. We also had a really tough week on our top 40 index, or our general market, last week. So we might see some relief coming into that and have a couple of days of green or upside with a little bit of rand strength to boot. So that's kind of what I think at the moment. I mean, the market is really sort of trading in a very sentiment-sensitive range where, we continue to see economic data that's really not looking good. We continue to see inflation data that's really looking as if, inflation is somewhat persistent. And this leads us to believe that we're probably going to have to continue to see more supportive measures, at least supportive measures from the Chinese economy, while restrictive measures from the US economy. We've got a bit of a situation where we've got a tug of war between the two. The US economy is running a bit too hot, and they have to continue to put up interest rates, while the Chinese economy is not really getting going, and their central bank is forced to do all sorts of things, cutting reserve bank deposit requirements and such and the like, even cutting interest rates in order to stimulate their economy. So it puts us in a very uneasy position. Nonetheless, I think that over the next couple of weeks, we probably have a little bit more tough times ahead, but in the short term, over the next week or so, we probably see markets bounce somewhat.
I digress, Petri, but in light of Brics, given the explanation about China's economy, is that why they would characterize themselves as an emerging market, for lack of a better expression, especially being part of the Brics bloc and sympathizing with the global south?
Yeah, look, I don't know if they could really still be classified as an emerging market. I mean, they were a long time ago. To a large extent, they still have a very large proportion of their population who is living, I want to say, in poverty or in rural settings, right? So not living in cities. So that could potentially be part of their emerging market classification. I think the point really is that there's a huge amount of space for growth, right? So if they have to get all of their citizens living in cities and living more to the standard that the average person in the United States or the average person in Europe were to live, that creates an enormous amount of wealth and an enormous amount of growth in China, which I think would be fantastic for the likes of commodity producers and such. So yeah, I guess to that extent they still are an emerging market because the majority of their population still lives somewhat rural, right? And there's a lot of room for them to move into cities. I think it's an interesting alliance between the BRICS countries, right? I mean, it's Brazil, Russia, India, China, South Africa. So we've got India and China particularly, which are massive, massive populations, right? And arguably two of the sort of most exciting growth markets, I think. Like, as I mentioned, there's this urbanization thing that needs to take place where the majority of people are still living very rural, which is, the same with us, for example. And as that urbanization takes place, there's, huge amounts of construction and opportunities and businesses and all sorts of economic expansion that takes place, during that process. And obviously it takes an enormously long time, 50 to 100 years, right? So I think what is interesting to note, though, is that the GDP of the BRICS nations has now sort of overtaken the GDP of the NATO nations, right? So if you look at the NATO nations, which is essentially North America and Europe, right? So it's the Western versus the Eastern world, if you will. And the Eastern world, from a gross domestic product on an annual basis perspective, has started to overtake the Western world. So that, I think, is really what the significance behind this BRICS conference is we're seeing that, one, economically, I know that for us in South Africa, the perception is often very negative, right? And we look around and we think, everything is terrible. But, from the sort of collective BRICS perspective, we're starting to become a bit more powerful than the West, the traditional West, right? Which is an interesting development to start off with. But now what's starting to happen is there's a long list of countries that are queuing up and applying to join the BRICS sort of, alliance. Well, not really alliance, but economic alliance, right, or trade bloc. So that is further expansion of the BRICS. So essentially what happens is BRICS nations, China, Russia, India, South Africa, Brazil, and all the ones that will be joining, are becoming increasingly more important and more powerful in the global trade, sort of arena. So I think that it's going to be a very interesting decade that lays ahead, and I'm quite keen to see what the outcome of this BRICS summit is going to be. If they continue to push for our own BRICS currency, where we have, like a euro situation, except obviously we're not all in the same geographic location, but we had one currency. I wonder how that plays out for South Africa, because we've had a situation where the rand continues to weaken and weaken and weaken and weaken over the last 30 years, over the last 40 years essentially. And it's lost an enormous amount of its buying power. So if we do get precious metal-backed currency, which is what the talk is about, I would like to see how that plays out for us, right? I think that could potentially be a good thing. However, the timeline in which something like this will happen, I'm unsure about. I think it's probably 5 to 10 years from now. I don't think it happens tomorrow,
Sure. Sure.
So I think that there's a lot of risk. I think that if we have, for now, we are still very Western aligned from an idealistic perspective, right? So I think that and also from a financial markets perspective. So I think that if we make steps at this conference over the next couple of days to closer tie ourselves to the likes of, China, Russia, India, BRICS, I guess, that might be bad for us in the short term, where we see Western, investment firms and funds and so on sell down our stock and sell our currency and all that kind of stuff, because we're siding with the opposite team, if you will. But in the longer term, I'm not sure that it's going to be a bad thing for us. So I don't know. I'm just quite keen to see how this whole thing unfolds.
Yeah, I guess time will tell. So those would be some of your key economic agenda items. Let's take a look at gold. It held below the $1,900 an ounce mark so far today, hovering close to its lowest levels in 5 months. What's driving sentiment?
Yeah, so gold has been under a little bit of pressure as well, which has been interesting. I thought that, in the light of markets coming off over the last 2 weeks, I thought that gold might be a bit more supportive, or a bit more supported, that it might actually rally somewhat. It did not. It has come all the way down today. It seems to be somewhat stable. I think that what we've really just had is a general, move away from risk assets over the last of weeks. And as I mentioned, a lot of the money sort of flowing into U.S. Treasuries. So I think that the yields on those U.S. Treasuries are fantastic, right? We're starting to see them being sold off a little bit now as well, but 30-year U.S. Treasury sitting at 4.4% is not bad sort of return on your capital. And I think what's been happening is we've just been seeing investors, particularly the larger ones, kind of swapping equities and commodities for these fixed interest incomes or fixed income investments like treasuries and so on.
Thank you so much for your time this afternoon. Petri Redelinghuys is the trader and founder of Herenya Capital.